Today was pretty calm in the markets, despite all of the loud noise that we've gotten news-wise regarding tariffs. So Trump spoke at a cabinet meeting today and they talked tariffs, and Trump really decided to cancel this taco trade that's been really associated with him and his approach to negotiating these tariffs after he said that this deadline for these tariffs, it's firm, but it's not 100% firm. And then maybe somebody like nudged his shoulder like, hey, like wrong answer. Don't say that. They think taco's coming back. Trump always chickens out. So then he decided, hey, all money will be due and payable starting August 1st. No extensions will be granted. And this is probably him trying to put his foot down and really separate away from that title that he's earned himself so far. And at the cabinet meeting, Trump expressed how he was displeased with the European Union and how their policies treat U.S. tech companies. It's not very favorable, and discussed tariffs being as high as 200% for pharmaceuticals, and that the European Union should expect, at least in the next couple days, to get their own letter from the administration after sending out 14 letters yesterday, mainly to countries out in Asia. Howard Lutnick also says that he expects another 15 to 20 letters sent out to world leaders soon. And Trump announced that members of BRICS will pay an additional 10% tariff just due to them playing unfair, trying to get away from the US dollar and gang up against America, pretty much is what I got from it. Also, he announced that copper gets rates at 50%, so a tariff rate of 50% on top copper, which is really a head scratcher just because copper plays into so many different goods, and if AI is the new revolution and America wants to be first to that, how much copper goes into some of these data centers being built? So that's just a question to throw out there into the pond and see what fish gobbles on. Now, regarding stocks, like I said, they were really calm today despite everything going down. You see this larger move to the downside yesterday, and now we're just kind of like sideways, not a whole bunch of moves. UBS chief economist Jonathan Pingel told reporters that the weighted average effective rate for tariffs is up 6 times from its 2.5% it was at the beginning of the year, now being at 16%, and would shave off about 0.7 percentage points off of GDP over a year, starting to show up starting in Q3 or the second half of the year, possibly. And the impact on GDP being even higher, closer to 1%, if rates go back to these tariff rates. We talked about interest rates and now it's tariff rates, but this rate word, it's real important. It's been important for quite a while. But if these tariff rates go back to their April 2nd Liberation Day levels, we could see that weighted average effective rate for tariffs being closer to 21%, and that would really drag on GDP. And remember what they say about GDP. 2 negative consecutive quarters of GDP is what's formally defined as a recession, depending on who you ask. Now, this could be due to extended deadlines, giving more time to make something happen, and what UBS describes as an escalate to quickly de-escalate approach to negotiations, leaving investors to really look past this uncertainty that exists. So that's probably been this support that we've seen here while stocks are still near their all-time high levels. But overall, UBS sees tariff news here on out not really being a nothing burger, so to say. And this is in my own words. Not having so much of a huge impact as we go forward on the stock market as it once did. Now, tariffs do impact company earnings, but stocks do look supported by a few different factors to play out here. We had the tax and spending bill pass. We have lighter regulations on businesses, so maybe they're able to make more money, create more jobs, help out the economy, plus that tax and spending bill. And then even a possible Fed rate cut starting maybe in September, maybe July is off the table, so to say. We don't know. We just don't know yet, but it seems very likely we're not getting a cut in July. And they're even trying to say, hey, we don't know about September now. But remember, Trump is he's expressing this idea of naming the future Fed chair. And what that future Fed chair can do, the shadow Fed, is talk to the market about what he's going to do. Oh, it's going to be so great. We're going to cut rates the lowest they've ever been cut. And that could add a lot of hope and optimism in this light at the end of the tunnel for the market, because, hey, like, the economy is going to get better right when Jerome Powell's term is up in 2026. So that can all play into the median term timeline, but in the short term, it is super questionable about where the stock market could go, especially as earnings starts coming out, and that's really the spotlight behind the spotlight. So the main spotlight is tariffs, and like we just said with UBS, they don't think that this tariff news is going to have the same impacts. I beg to differ a little bit, because, like, remember, Trump wants to get away from always chickening out, or at least that title. So he's going to do what he needs to do. And you notice this little Bollinger Band is kind of getting smaller. So the wider it is, the more uncertain about price swings and the direction and length of momentum where it could go. It's a little smaller. So who knows if a breakout could happen based on some news. But with these earnings numbers and forward guidance that we get from these companies, it could weigh on where stocks are destined to go. And it really just depends on literally that, especially as these stocks are trading at these super high valuations. And large banks aren't expecting any positive surprises to the upside regarding earnings from these companies. Goldman Sachs pointed out that the S&P's spring rally being one of the strongest in 5 decades makes it vulnerable to larger than average drawdowns, at least in the near term. And according to analysts at Deutsche Bank, summer months tend to witness the sharpest spikes in volatility, which can lead to interesting Q3. So it's all just funneling up, piling up on top of each other, and there's this wall of uncertainty that's just moving out. Just think of this cloud above the ground with a thick wall of strong rain just hovering through, and we cannot see through that thick wall of rain. So it all just comes down to the news that continues coming out, and it all comes down to how tariffs and earnings begin to play out. So another big bank was talking about how market breadth seems to be holding up well, but market breadth in terms of earnings is going to be important as earnings starts coming out and we get more clarification on what's been going on with these tariff impacts and how's it showing up in the data, who's paying for the costs, is it margin that's being impacted and then companies making less, where are the price increases coming? So there are two likely scenarios. There's this, I don't remember the exact terminology on which one went where, but the catch up and catch down. So the question is regarding market breadth, regarding earnings, do just a few large tech companies only lead these earnings? Like, are we only seeing beats or good earnings and good forward guidance coming from the larger tech companies, which the huge companies with billions of dollars in cash on their balance sheets are expecting, like, optimism going forward? Or are we seeing this common trend across the entire company and it looked good for even smaller companies when they come out with beats to the bottom line? So that's kind of the determinator that some large banks are looking at, is market breadth in relation to earnings. Now, we got some data, and consumers view inflation as it's looking a little better. So I think it was the consumer credit. Maybe it wasn't the consumer credit. Let's just keep going, and we'll get there. So consumers' views on inflation in the coming year slightly fell to 3% in June, along with unemployment and household income growth all leaning more to the positive side. But how does this week's news with Trump and tariffs and this possible trade war, how does all of that impact the data? Like this data we're looking at, it's from like a month ago, 2 months ago. So how does that impact if we were to think like right now, if we were to ask these same questions to these respondents, how would they feel regarding that? We also got this survey from Credit Karma, and what Credit Karma revealed is that it showed nearly 3/4 of respondents worry that companies will use tariffs as an excuse to raise costs, and or even just the idea of tariffs to raise costs, even if their industry is not necessarily impacted by tariffs, they'll just raise costs anyways. And inflation expectations that consumers have, it's almost a self-fulfilling prophecy, because when people expect price cuts, businesses are like, oh, how'd you guess? Ding, 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 we got a winner. Here's your price increase. You expected it. Now, 65% of those respondents fear that it'll in fact affect their pricing power. So people are really dreading these tariffs when you're more of a consumer, and Credit Karma with Intuit, they got some good data for us. Now, we got some credit data, everybody. And total U.S. consumer credit growth slowed to $5.1 billion in May, down from a $16.9 billion rise, translating to a 1.2% annual rate in May, falling short of the expected $10 billion gain. So let's just think of this. Credit growth came in literally half of what it was expected. And maybe just people are waiting, they're holding their breath, or waiting for this tariff mess to really work its way through, saving money, worried about possible layoffs in the future, although the job market's been holding up pretty well, assuming you have a job and you're not looking for a job. Revolving credit fell to 3.2% in May from a 6.9% gain, being the first drop since November. Revolving credit would be like lines of credit, or even credit cards would be another way to think about it. Now, non-revolving lines of credit, these numbers are less volatile, so people don't pay as much attention to them, but they're pretty steady. So they rose 2.8% following a 3% rise. So it's still rising, just at a slower rate. Then we also got some business optimism data. So the NFIB Small Business Optimism Index came out. And what this one revealed is that on the other end of the scale, business optimism actually dropped slightly, falling in June to 98.6. So very so slightly drop, and this was due to the uncertainty leading to the fall in spending plans, investments, hiring as well, job creation's heading down, all due to tariffs and where we possibly go from now. So that's kind of what we got today, y'all. Just a couple pieces of data. I mean, the main news, the main spotlight, the main layer of the cake that we're working on eating right now. You've probably heard my cake theory. If not, we'll talk about it in future videos, and I hope you join me in future videos. But the main spotlight right now, Trump. And then behind that, earnings. And then behind that, the Fed and interest rates. So that's really what everybody's watching. And not even to mention if the Middle East conflict picks back up and oil prices meaningfully surge somehow, or if this trade war progresses, and or somehow like all of this leading up just happens to an actual war. I mean, Trump just said that he mentioned that dealing with Putin's been kind of tough lately regarding the Russia and Ukraine conflict going on. So there's just a lot of moving pieces. It's like you're on this, imagine the Jetsons, but like in common day. So there's not all this traffic on the highway where everybody's going the same direction. You're either going this way or this way on the highway. Boom, boom. Imagine the Jetsons where everybody's just like randomly flying in the air, and you're just like standing there just trying to make sense of it all, and it's all just happening so fast. Weird analogy, right? But this is a weird time. It's an uncertain time, and I want to keep on covering it here, y'all. I'll be back tomorrow with any of the news, any of the findings that come out. I doubt that oh wait, I think tomorrow's a treasury auction. Let's look real quick. Let's look at what we got news-wise, just while we're here, so we know what to expect. Because I think we got some treasury auctions. I think it was Tuesday and Wednesday were the main days, or it was Wednesday and Thursday. But we had some shorter-term treasury auctions, and then we had a 30-year treasury auction. But Wednesday, we get the minutes of the Fed's May FOMC meeting, wholesale inventories. Yeah, tomorrow's a good day to look for some data. The minutes of the Fed will be an interesting read. Thursday, initial jobless claims. We're going to watch that every single week. We're expecting initial jobless claims to come in a little bit higher. Got some Fed speak. And then Friday, we'll wrap up with the monthly U.S. federal budget. So we'll keep on watching this, everybody. Hope your day was great. Hope it's not so freaking hot where you're at. Even my room, it's hot, man. It's 89 degrees over here, and these lights and all of this, it's hot. But anyways, y'all have a good one. I'll be back tomorrow. Peace out.